Ladies and gentlemen, good day and welcome to Natco Pharma Q4 and FY'24 earnings conference call hosted by Batlivala and Karani Securities India Private Limited. As a reminder, all participants' lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishikesh Patole from Batlivala and Karani Securities India Private Limited. Thank you and over to you, sir.
Hello, good morning everyone. On behalf of BNK Securities, I welcome you all to the Q4 FY'24 earnings conference call of Natco Pharma. Hope everyone is in good health and doing well. On behalf of Natco today, we have with us Mr. Rajeev Nanapaneni, Director and CEO, Mr. Rajesh Chebiam, Executive VP, Crop Health Sciences. I now hand over the call to Rajesh for the management's opening remarks, post which we'll open the session for Q&A. Over to you, Rajesh.
Thank you, Rishi. Good morning and welcome everyone to Natco's conference call discussing our earnings results for the fourth quarter of FY'24 and the full year results which ended March 31st, 2024. Our discussion during this call will include certain forward-looking statements which are predictions, projections or estimates about future events. While these forward-looking statements exemplify our judgment and future expectations, please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Natco Pharma undertakes no obligations to publicly revise any forward-looking statements to reflect in future events or circumstances. I'd like to state that except for the participant question, the property of Natco cannot be recorded or rebroadcasted without Natco's express written permission. Okay, now let's start with the earnings details. We hope you received our financials and press release. Also, the investor presentation was updated earlier today. These are also available on our website. So the company has recorded its highest ever consolidated revenue and profits during this financial year. This is a result of decades of our diligence and focused strategy on niche high potential molecules. So for the full year FY'24, Natco has recorded consolidated total revenue of 4,126.9 crores as against 2,811.7 crores for the last year. This is reflecting roughly about 47% growth. The net profit for the period on a consolidated basis was 1,388.3 crores as against 715.3 crores prior year, showing a growth of almost 94%. Our business on the domestic front had a one-time charge of roughly 90 crores, the details of which was communicated during our press release. We will discuss further during the call. Our revenue split as well has been disclosed during our press release. So with that, I will pause here. We'll take questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Viraj Mahadevia from MoneyGrow India. Please go ahead.
Hi, congratulations Rajeev, Rajesh and the entire team at Natco for the excellent results and for proving the naysayers wrong. Given that you have delivered 380 crore PAT in Q4 after the exceptional costs of 90 crores, can we assume, given Revlimid ramp-up underway, a 400 crore pack per quarter is sustainable for the next 1 to 2 years?
It depends on, I don't want to say...
I mean, within a 5% tolerance on either side. Is it in that ballpark?
I'll not give you like quarterly updates like that, but what I can say is like this, okay? This year we did about, 1,388 crores profit. I think going forward next year, we at least see if all goes well and there are not too many surprises. I think we should do greater than 20% growth for the year.
Perfect. That's exactly what I was looking for. If that is the case, the stock trades on FY'25 ex cash at 10 times PE per my calculations. Very cheap by any standards, given your 1,000 crore cash on books and an incremental...
No, it's not 1,000. Actually, we had some tax payments and some vendor payments to make. But actual cash position is actually 2,000 crores. Yeah, net.
Okay.
We had 2,000 as of May 26. We have 2,004 crores of cash and investable, liquid assets and 116 crores of debt. So that's the actual position.
So approximately 2,000 crores of cash and an incremental 3,000 crores of free cash flow per my calcs in the next 2 years. So even with an acquisition plan, which you have suggested in the past, are the promoters and board not considering a buyback?
I think, I'm thinking about it. I've not made up my mind. I think if we get a large enough acquisition, then I don't want to do a buyback. But if we are unable to close a large acquisition, then maybe we can consider a buyback. I've not made up my mind as of today. I think we'll decide as the year unfolds. Yeah, but I think that's the thinking.
Understood. Thank you. Do give it some thought. Promoter group obviously is at 49 odd %. So even a small buyback would add a lot of confidence in.
We'll do what is right for the company. Yeah, certainly. Yeah.
Okay. Thank you. All the best.
Thank you. Next question, please. Thanks, Raj.
Thank you. The next question is from the line of Siddhant Singh from Green Portfolio. Please go ahead.
Hello, sir. Hope I am audible.
Yes, you are. Go ahead with your question.
Sir, I wanted to know about your investment in Cellogen. Like, we are very optimistic about the development and all, but how you are planning to leverage this collaboration, and what is the time frame you are expecting that it will get completed, and how it will impact our financials?
CAR-T therapy is something that we don't have a skill set in-house in Natco. As you know, we are strong in oncology, but we don't do biologics, and neither are we doing the newer therapies like CAR-T. And I feel, biologics anyway, we are not participated in that. So I feel the newer technology like CAR-T, I don't want to miss. I think if you don't have the skill set in-house, then you're going to invest in a company which has the skill set. So I think that's why we've done it. We feel that a lot of the oncology therapy is going to go to CAR-T. So it's a modest start. I think we have the option to invest more, depending on how things go. But it's a modest start. So let's see how things go. It's very early stage. I can't get into timelines and all, but I think we're excited, and I think we see that there are a lot of opportunities in this area.
Okay, sir. Sir, as also previous analysts also asked about acquisitions that you will do in the future if you will get a chance. Like, sir, is there any specific geographic areas or any product line which you are focusing on or looking to explore in future?
I think, I said this in the past as well. I think the acquisition space is to build strengthen our base business. So we have the money to do it. And primarily we're looking at an ROW business. So we're looking at different options. As of now, we're not able to close anything, but, we're hoping in the next couple of years we're able to find something that will give us a strong base. So to answer your question, yes, we're looking at acquisition and in the ROW base. I think that's what we're looking at.
Okay. Yes, sir, and last question is about how do you see the top line for FY'25 and EBITDA margin? Like, what we can expect, like previously what you told us, you did it. So what we can expect for FY'25?
I think we believe that we should be able to grow top line wise also more than 15 to 20%, and even on earnings growth also we're looking at about 20% comfortably. I think based on certain assumptions and price erosion assumptions. But yeah, I think again we'll know, but I'm optimistic that I think we'll be able to hold this.
Okay. Thank you so much, sir, and all the best for you.
Thank you.
Thank you. The next question is from the line of Nirali Shah from Ashika Stock Broking. Please go ahead.
Hi. Congratulations on the strong set of numbers. My first question is regarding Revlimid. So in the previous earnings call, you did mention that with year 3 beginning from March 2024, we will have a new allocation for Revlimid. And noting that exports are driving growth, could you provide some insight on the contribution of Revlimid to overall sales for 4Q? And also, how should we look at it in financial year 25 as well? So, do we anticipate any significant boost to revenue from this in the upcoming year?
Again, we can't predict the future of what the trajectory of pricing is, but overall, I think Revlimid is, obviously a good portion of our earnings this quarter. Overall, our ROW business has also done well. Brazil has done extremely well. Canada has done well. Brazil, I think, direct exports and our subsidiary exports are almost 25 to 26 million a year. Canadian sub has done nearly 40 million Canadian. So I think overall our ROW business is doing well. I think this year we are expanding into, we have some very good orders from Egypt and Saudi. So I think we're working very hard to diversify our ROW business, and I think that endeavor has gone well. In terms of split and all, we don't do for strategic reasons, but I think I've answered your question. I think a good portion of it is coming from Revlimid. And so I think this year, I think we've based on the orders that we have and overall business prospects, I think we've given a guidance. I think that covers your question. Thank you. Next question.
My second question is about the agri business. So as far as I understand, the second half of the year is typically a little bit weak compared to the first half. And then how should we view this segment for the first half of FY'25? Any guidance would be helpful.
I think, we wanted to do about 140 to 150. I think that was our estimation, but I think we fell short and by about 25-30 crores. We believe that, monsoon was bad last year and we had some returns and we had to make a call. Do we take the returns and go forward or just carry the stock? So we just thought that it's better just to be prudent to just, take a hit and clean it up and go forward. Overall, I think it's a good business. We are happy with, we built a reasonably brand business in a very short duration of time. And in terms of guidance and all, I'll let you know. I think maybe around June quarter, I think we can give you specific guidance of how the business is going. I think our internal estimation is that we should do well. I think we should have very good growth. I think very specifically, I'll tell you, I think in June where we see things are going. This is our first true year of operation. So this is our second true year of operation. So I think we'll have a better idea how things are. I think a lot of it is contingent on we have some new launches we are planning. So I think once we have clarity on that, I think I can give you better guidance. But we're very optimistic with a lot of the first-time generics that we're trying to launch in the agro business. And I think the business in over a period of time should do very well. Okay?
Got it. Thank you. I have a couple of more questions. I'll join back the queue.
Sure.
Thank you.
Next question, please.
Thank you. The next question is from the line of Hirshit Zaveri from Pi Square Investments. Please go ahead.
Hi, sir. Congratulations for the great set of numbers and meeting the guidance which you provided. I just wanted to understand, with so much cash in hand, do we have any significant capex plan this year?
It's nothing large. I mean, we expect that we should spend about, I would believe, 300 to 350 crores a year is what we're spending in a year. I think more or less we'll spend that just for maintenance capex, just to make sure that what we're making and just and sometimes you just have to add a few things just to maintain and build orders that you have. We're not building any new sites, but in the existing sites itself, we're expanding capacity. I think that's more or less what we're doing at this time.
Okay, understood. And sir, I just wanted to have a brief about how is the demand shaping up for the export customers? Like all this geopolitical crisis, Red Sea crisis, has this affected Natco or not?
Not so much, because our model is very different compared to everyone else. I don't do commodities. I don't do, volume products. Our whole model is only doing niche. And a lot of our shipments are by air. Compared to the value and the air freight component is not a significant portion of the costing. So it does affect, of course, air costing. The logistics costs have gone up, but it doesn't have the level of impact that it may have on someone who does more volume products. So, yeah, there is impact, but nothing dramatic.
Okay, sir. Thank you and all the best, sir.
Thank you. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Am I audible?
Yeah, go ahead, please. Go ahead.
Hi, Rajiv. Congratulations on really good numbers. So, two questions, sir. One was anything that you would like to share on the NC that you have? That was my first question.
Okay, let me answer your question. So we have one NC, which is we're doing phase 2 in the US at this time. It's early days, so I think I've refrained from giving any guidances or any ideas. So we're doing phase 2. I think it's there. It's available. This information is available in the public domain. It's early stage, yeah? So I think, and we're targeting a type of oral cancer specifically. So we'll see how things go. I think it's early days. At this time, I don't want to comment.
Sure. The other two questions I had were, one is, so you said 20% growth. This is on the base of excluding the exceptional or on the reported numbers? That was one. And then I have one more question after this.
Can you rephrase that question? I didn't get the question. Please repeat it.
Okay. So I was saying, so we reported 1388 crores of profit this year, and you said 20% growth on this. But we also have like one-offs of around 90 crores. So, I mean, one should adjust the one-off and look at the pre-adjustments or the reported number is what I wanted to ask. That was the first question, and I have one more after this.
One-offs, you asked a very tricky question, like just straight answer. See, one-offs happen in any business. I mean, so you have a different one-off in a different year. So 1388 assumes the one-off. I mean, but next year, I mean, in my mind, I'm starting with a clean slate that hopefully I'll not generate another one-off, but anything can happen, right? So we always budget for that. So you can't really, you will make one bad inventory decision, you will have one bad, currency risk. So, I mean, there's so many moving parts, so it's very tough to judge. My assumption is 1388 assumes whatever has happened, and 20% growth assumes, everything, and so we can only make a projection. So.
Sure. Understood. And my last question is, so next year, or next financial year is when Revlimid goes off patent, and we could see a substantial decline in earnings. So, I mean, how are you thinking about I know this question has been asked you many times, and we are now very close to that date. So how does the management think about the business? We have a pipeline, I agree, but just from, let's say, FY'27 onwards, how do you think building that base, which is going to be a big gap to fill? So if you can share some thoughts.
See, that challenge everybody faces. I think, we all have very good products, and once they decline, we had this in history. If you look at Natco's history, we always had these big products. Glatiramer used to do extremely well, now it has declined a bit. Tamiflu used to do extremely well, and then over a period of time it declined. So you just have to keep finding something new. That's the challenge that I face and everybody faces. And I think in a market like our business, in pharmaceutical business, where everybody is well financially geared, there's very little money that you could make in a product where there are multiple suppliers. So you can only make money in the niches. And I think I've said this many times, I'll repeat it one more time. Unless you get the niches right, you can't have earnings growth. And I think I've been saying this and I'll say it again. What do we have to replace it? I mean, have definitely is semaglutide. We have, I've said we have FTF on that product. So on certain strengths we have FTF, and on Wegovy also we have FTF. So and certain strengths we have sole FTF. So I mean that's probably one big idea. Then we have other first to files like Yondelis, Trabectedin. We have let's see, olaparib. I mean we all have to see how these things work out, but the trick is that you have about 3 or 4 of these, and in the next 2 years you build another 2 or 3 ideas. Then you have about 6 or 7 ideas, and hopefully you'll be able to generate consistently something every year. You'll have 1 or 2 years where you'll have a bit of gap, but you gotta accept it. I mean you just can't fight it. You just have to keep building the pipeline, and then hopefully you'll be able to do an acquisition which strengthens your base business, and that's how you have to look at it. There's no other way.
Sure. Thank you, Rajeev. All the very best.
Okay.
Thank you. The next question is from the line of Ameya from JM Financial. Please go ahead.
Yeah. Thank you for taking my question, and congratulations to Rajeev on good set of numbers this quarter. So first question I have on the acquisition which we are talking about. First, why ROW market? What is the thought process there? And will it be a front-end acquisition, or you want to do some acquisition related to technology which could help you to maybe build your R&D? But if you can give some clarity on the thought process of the M&A.
I think RM emerging markets are very interesting. They're very consistent. They're a lot like domestic. I mean, you have local brands and you have a sustainable business and you have a distribution arm which is consistent and large and gives you stability in earnings. And I think I have my own views on this. I personally believe this is the market to go to. It'll give you more broad-based earnings and consistent earnings. And I think acquisitions in India are very expensive. I don't think they will give you the return on capital that you deserve. And I think you need to go out and regulated market, we're already fairly saturated in that business and we have fairly strong presence in it. So I think the only gap is the rest of the emerging markets. And this is the way to go, and I believe that this is the way forward. And this is how I see in terms of acquisitions. This is the area where valuations have not run away compared to our home market. Yes.
So should we expect you consolidating your presence in existing ROW, or we would see a new market coming up?
Anything is open. I mean, we look at different assets all the time. I mean, unless you close something, you can't really, state a particular position like you asked me. But we're looking at things. I mean, again, I don't have an answer to your question, but I think you asked me what am I going to do with the money. So this is what I feel we should do with the money, and I'm giving you my reasons for it.
Sure. And the next question I have is on the filings. Last quarter we had said there are 2-3 interesting filings over the next few months. Have they been already done, or we are still in the process of filing this one? And will those be a near-term opportunity post-Revlimid, or would be a bit far off? Yeah, thank you.
So, I mean, we're looking to file a few products this year. Hopefully, we'll be able to pull off a couple of FTFs. Again, I don't have any news for you. I mean, we filed one recently. We filed a product for Remigipant for migraine. But it was like, I think 7 or 8 filers on day one. So it kind of takes away the charm from it. I mean, you have to see, I mean, unless you file and look at the position and your patent position, number of filers who are filed on that day, you can't tell whether you have a unique position. So we'll keep trying. As I said a few minutes ago with the other person who asked me, we just have to keep filing different things and then hopefully we'll get something right. Yeah.
Sure. But generally, we do have idea, right, on these, because the product we talked about is oral solid, ODT basically, largely. So where maybe there could be a possibility of filing, but maybe if a complex injectable is there in the R&D or something like that, I doubt there would be.
We have umpteen number of ideas. I think it's not the lack of ideas. It's only about the execution. I think if you pull off, I was just saying, right? If you pull off another 3 ideas in the next 2 years, I think we've done a great job. So then add, for your pipeline post 27. So I think that should be the objective. And you just have, if you ask me, if I look at my R&D pipeline, I have at least 5-6 ideas, but by the time you file, you should hope that somebody else doesn't file. You should also hope that you'll be the first to file. There's so many moving parts, so it's very difficult to judge. See, in this business, you're competing with few played by the molecule. You're probably competing with about 4 or 5 guys you have to beat. So it is, in a way, it's easy, right? If you're able to beat 4 guys, you win the race, right? But at the same time, your execution capability, your timing, your science plays a big role. And as I said, if you're able to pull off 2-3 of these ideas, I think you're done well. So let's hope, yeah.
Sure. Thank you so much. I will join that.
Thank you. The next question is from the line of Bino from Elara Capital. Please go ahead.
Hi, good morning, Rajiv and Rajesh. Congrats again for a great year. I'm just thinking beyond Jan 26 on Revlimid. Does the distribution agreement and profit share agreement with Teva continue beyond the settlement date of Jan 26 in the pretty much the same term?
I think we have a distribution. Is your question, do we have a distribution agreement with Teva which will continue? I think yes, we have an arrangement with Teva that will continue.
And the profit share will be pretty much in the same term.
Yeah. For the US market, yes. We are working with them in the US market. Yes. Right.
Okay. Got it. Thank you.
Thanks.
Thank you. The next question is from the line of Karan Agarwal from Old Bridge AMS. Please go ahead.
Hi, good morning. Just one question. 2 years that Revlimid's come through, how is the pricing traversed, say, from the first time that you launched till, say, Q4 of FY'24? And in the short term, in the next 20-21 months, do you have a view on the stability of pricing?
I can't answer that question, my friend. I can't answer that question. For strategic, I can't.
Okay, maybe not the future looking, but how has it traversed in the last 2 years?
It goes by the market dynamics. I can ask. Best answer I can give you. Yes. Yeah.
Okay. Thanks, Rajiv.
Right. Yeah.
Thank you. The next question is from the line of Nikhil from SIMPL. Please go ahead.
Yeah, hi. Good morning. I hope I'm audible.
Yes. Please go ahead.
Yeah, congratulations on a good set of numbers. 3 questions. One is, if you look at Revlimid, we had this Canada launch based on the tender. If you have to draw parallels between how the Canada market behaved for Revlimid and how US, would there be any parallels which can be drawn in terms of how much pricing, or would you say it would be completely different? Because it's a REMS product, so the whole idea was that the pricing erosion once it goes operating may not be the way most molecules happen. So are there any parallels which can be drawn between Canada and US?
See, you know that we don't market the product in the US. Teva decides the strategy and Teva decides the pricing. And every market is very unique. You can't draw parallels between any. Canada is a completely different market. How the product is distributed and how the tender cycles work. So to answer your question, no, you can't draw parallels. It's a different world, 2 different countries, 2 different markets, 2 different strategies, 2 different marketing partners. So you can't. Nothing is comparable, honestly. Every market is unique and in their own way.
Okay. Second question was on crop sciences business. So we had a couple of products on serum based, and there were more on the pipeline, and even CTPR combinations and all. Now, 1 year down the line, we've done the launch. what do you think could be changes which we need to bring into our execution? And one of the reasons for going into crop sciences the idea was that this will provide some stability to the base business and can be scalable and very profitable. So are there any changes to that assumption from where you began and today how you see the business?
Done well. I think we have done well with the CTPR combination. Pheromone has not taken off as well as we thought. I think it's a lot of appreciation for the product, but I think the pricing has been on the higher side because of cost of goods being high. So the adoption has not been as strong as we would like to. Because at the end of the day, India is a very price-sensitive market. Overall, I think we're trying to expand our portfolio, so we are present in multiple segments, so that we could, have a larger sale. And we're trying to, increase our portfolio and try to do a lot of unique launches. I think we're doing well. I mean, started off well. It's a reasonably large brand business. I mean, to build a 100 crore brand business for a business that you're not aware, 3-4 years ago is a pretty laudable achievement. I think things are going as per our expectation. But still, I think it'll take another 2-3 years for the business to get established. And I think things are on track. I think that's my sense. Yeah.
Okay. And last question. See, Rajiv, you've always talked about that acquisitions in India are pricey, and we've seen this happening in the market. And if you look at the non-regulated market acquisitions, the amount of cash which we are generating, I don't think over the next 3 years, the cumulative cash will actually, even after this acquisition, we will have some cash. So when you are thinking about deployment beyond 2030, and the whole idea for us has been looking at opportunities in oral dosage. But do you think that at some point we may look at changing our line of approach, maybe towards more biosimilar or completely different technology for products beyond 2030? Or just how do you think about the pipeline beyond, say, for R&D beyond 2030 kind of business? So do you think there should be a large investment there?
See, I tell you, every business goes through a churn. What worked 5 years ago won't work anymore. And you need to sort of reinvent your business every year, every moment you have to reinvent yourself. See, what I did 15 years ago, if I do now, it won't work. Similarly, what you're doing now won't work in the next 10, 15 years. So that, if your question is that we have to constantly reinvent ourselves, absolutely correct. So I think my sense is yes, you need to work on newer molecules, you need to go to newer markets. So what we're doing, what is easy, which is going to newer countries, expanding geographically and going front end compared to the model which was, distribution model. So that I think we have moved up the value chain. So that's a big change that I made in the last few years compared to what we've done in the past. We continue to invest in more complex generics, drug deliveries, oligopeptides, that type of products. So that I think is another thing we're doing. Another thing that we're talking about, like for example, CAR-T is another area that we're investing in. So you got to keep your fingers in different pies. You got to constantly keep investing. I'm just giving you a flavor of what we are doing. So, but I see as of now, we're trying different things. We're trying 1NC, we're trying hard to do generics, we're trying geographical expansion. So you're trying different things. We're trying 5-6 ideas. So, and I think eventually you'll land somewhere. And based on that, if something clicks, then obviously you'll go to the next level as a firm. But I take to your point. I mean, yes, you are absolutely right. You just have to keep reinventing yourself. And you're absolutely right that the future drugs are all going towards rare diseases and biotech. They're not sticking to the chemical tabs. Absolutely right. And I think you need to reinvent yourself. Absolutely.
Sure. Thanks. I'll come back in this.
Thank you. The next question is from the line of Rashmi Shetty from Dollars Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations on good set of numbers. So I have 2 questions. First question is related to the domestic business. You have taken a 35 crore charge and there was some change in the business model. If you can give more color on it, and if you can also give information whether the impact is over or we are going to see in quarter one as well. And since we were doing quarterly sales of 100 crores in India business, even if you add back this 35 crores, we are still running at the rate of 85 crores or something. This is just a quarter-on-quarter dip, or we would be able to maintain this 100 crore quarterly. This is something which we want to.
I mean, it's a one-time charge because we just changed a few things on the way we're distributing. I think the run rate is still 95 to 100. There's no change in that. Absolutely, there's no change in it. If you see, even if we take the reversal, our annual sale is nearly close to 400 crores in spite of the reversal. So I think there's no change in that. I think we are consistent. The business is doing well. The secondaries are doing well. We believe the business is growing around 8 to 10%. We're looking at some jackpot ideas here as well. I mean, hopefully we'll be able to execute a couple of good ideas. But, no, I don't see a challenge. I think the business is fairly consistent. It's a one-time.
Okay, and we will be able to grow 14 to 15% from this level, whatever we have done around 386 crore in FY'24?
I think so, yeah. I would believe so. I think where things are going, yes, I would believe so.
Okay. And my second question is related to Copaxone. In the US, if you can comment more on, how the sales were during the year, whether the market share is steady, you're seeing any sort of price erosion or any erosion in the market share, if you can comment on it.
It's been consistent. I think it's done well. I think there are only two generics, Sando and us. So, Mylan has done extremely well with this product. But as you know, a lot of the multiple sclerosis patients have moved to the oral formulation as opposed to the injector formulation. There's been a slight decline in the consumption of this product. But overall, it has its position, and I think it's doing reasonably well. It's been steady as of now.
Got it, sir. Thank you so much.
Thank you. The next question is from the line of Kunal Randeria from Axis Capital. Please go ahead.
Hi, good morning, Rajiv. Rajiv, earlier you used to mention that the base business PAT is of around 200 to 250 crores annually. So does it still stand, or is it higher or lower than what you have previously mentioned?
I didn't understand your question, Kunal. Can you rephrase that question? What is 250 crores? I'm sorry, I didn't understand what you said.
The base business PAT, profit after tax, you used to mention should be around 200 to 250 crores. You used to mention this maybe 2-3 quarters back. I just want to understand, is it still holds, or is it better, or is it gone down a bit?
I think it's improved a bit. I think it's improved, but there are a lot of other R&D expenditures that were there. So, I mean, I can't really tell you like this quarter we're doing this much or that quarter we're doing that much. But I think I would say, honestly, I don't have an answer to your question. It is probably around maybe 350 to 400 crores PAT, I would believe. Yeah, I think around then. Yeah. If you put me on a spot and ask me like this, I can't answer because because there's so many moving parts. But if you want me to answer it in a broad sense, yeah, I think it sounds about right. Yeah.
Sure. And secondly, just thinking out loud here, Rajiv, Revlimit's kind of settlement was a bit unique in the industry. Do you think that such kind of settlements between a generics and the innovator will occur in future also, or is it that because a lot of generics were also sued, it may just discourage such settlements?
I don't know, Kunal. I don't have an answer to that question.
Okay, I just wanted to get a broad thoughts on this and on the same. Not a worry. Just lastly, Rajiv, I think the Kothur plant is under a regulatory scanner. Just want to confirm that all the new filings you are doing, are they from multiple sites, or, just want to understand a de-risking strategy here?
Generally, we have two sites for the US. So we have Hyderabad and we have Vizag. So yeah, some like Remigipan that we filed recently, we filed from Vizag. We can use these two sites, or sometimes we also use a CMO because our model is doing niches, right? So like semaglutide, we did it as CMO. So it's not that everything has to be done in-house. And the way our model works, because we do so many niches, we could always move it around. It's not very difficult. And we always, for our top products, keep 2 sites as a backup. So.
Okay. Got it. Thanks. Thanks for all the best.
Thank you.
Thank you. The next question is from the line of Ritika from Value Quest. Please go ahead.
Hello. Thank you for taking my question. My first question is on the US business. So what are the key launches we expect in the next 2-3 years? If you could highlight that. And majorly, we will see Revlimid going off patent in FY'26 end. So what should be the key launches, or how should we expect which products, or how should we expect this Revlimid revenues to offset?
What are the key launches you're saying in the next few years? Is that what you said?
Yes.
Yeah. So we mentioned that. Semaglutide we mentioned. I think olaparib we have mentioned. Carfilzomib we have mentioned. Trabectedin we have mentioned. So I think this is all there in the investor presentation. In terms of size, semaglutide is the biggest, and then olaparib is the next biggest one. And then we have Imbruvica, but we have to see what happens in the court case. Then Trabectedin and Carfil. So they all have different levels of values, but we have 5-6 ideas. Yeah.
Right. So, but in the
so
next
the timing and all is subject to patent. Sorry, say that again. I'm sorry.
Sorry. In the next 2-3 years, do we expect any of these products to come to get launched?
We can't answer that question directly because the settlements are bound by confidentiality. So I think closer to the launch, I think we can discuss about it. They're all going to play out in the next few years. That's correct. But the litigations are not resolved, so there's no answer to that question. So once they are resolved, we can't tell the date because they're bound by confidentiality. But they will open up in the next few years. That's correct.
So, last question is on agrochemicals. So you mentioned earlier that it will take 2-3 years for the business to get established. In your sense, how are we seeing growth from CTPR in the next 2-3 years, and also the overall agrochemical business?
How do I see the growth in agro business? Is that what your question is? I think we have very good pipeline. I think we are expecting this business. I think our internal target is that this business has to triple in the next 3 years. I think we want to go to 300 crores. So I think, I think that's the target that we're given. So let's see how. Hopefully we'll be able to do it in the next coming few quarters. Yeah.
Sure. Thank you so much.
Thank you. The next question is from the line of Naman Gala from Venture Sector. Please go ahead.
Yeah, thank you, sir, for this opportunity. Actually, sir, if you could just highlight the different growth drivers for your all the segments till FY'27, and what kind of revenue growth can we see across the segments?
It all depends on so there are 3-4 issues that we'll look at. We need to have clarity on some of the niche filings that we have, which we'll be able to get in the next few years. So I think we mentioned about the first to files already, and then we'll hopefully add a few more first to files to it. So that's probably one moving part. The second portion is the base business, how our ROW will do, how well we'll scale up in the other ROW markets. That's the second growth driver. And third is the acquisition. I think we're able to consummate an acquisition, so that will also strengthen the business. I think these 3 tracks are the most important things that we need to take care of for achieving consistent growth in the next few years. Okay.
My second question would be, what is the employee count? Can you hear me?
Yeah, please go ahead.
Yeah. So what would be the employee count for the year? And we can see that the employee cost has come down from 18% to 13.9%. So can we sustain the current level?
I think so. I think sustain the current level of costing on the employees, or the number of employees? The employee count roughly is about. It all depends on how the products do. But I think for now it will hold up, and the percentage that you said will hold up. Total, I think, including, without the contractors and the part, if we remove the contractors, I think is about 5,000 employees in the system, and to include the contractors and everyone, I think it's about 5.7 to 5.8 is what I think is my understanding.
Okay, thank you, sir. That's all.
Okay? Yeah. Next question.
Thank you. The next question is from the line of Chetan Doshi from Tulasi Capital Services. Please go ahead.
Congratulations for the excellent set of numbers, and as per the guidance, you have performed very well. So congratulations to the entire team. Now my specific question is that we have taken a hit as far as API revenue is concerned for the last quarter. So this is one time or this is going to be a regular feature? And the second question is regarding the crop health science, wherein you have underutilized that division. So you are planning to launch some products and bought some raw material and then it was discarded. What is it that 30 crores is you have accounted for?
The hit is a one-time. Overall, the 90 crore hit is a one-time. So I think the domestic is just, as we explained a few minutes ago, it was a change in the business model. The secondary sale is consistent, close to 100 crores a quarter. So I don't see any challenge there. Your question is specifically why did we take a hit on the agro? So what we did was we built some intermediate capability at a third-party site, and we were using it for the launch of the agrochemicals that we were making internally at Natco. What has happened is there's been a dramatic change in the market environment where the pricing has dropped dramatically for the intermediates, and we are not utilizing that intermediate capability. So because we are not utilizing the intermediate capability, we had to make a provision for non-utilization of that. So we took a hit on depreciation of amount and certain advance we gave to that supplier. So I think that's why we took a 30 crore hit on the agro.
Okay. So that is one time, and you are targeting 300 crores in this segment in coming couple of years, right?
Yeah, I think so. Yes, absolutely.
That's all. Thank you.
Next question, please.
Thank you. The next question is from the line of Sandip Dixit from RJV Advisors Private Limited. Please go ahead.
Thank you. Just to one question on margins. We have seen a massive spurt in these margins over the last 12 to 18 months. Is this sustainable going forward? Is this the new Natco Pharma?
Margins. I mean, it all depends on the product mix. I think if you have a good product mix, the margins are sustainable. So I think it all depends on the product mix. Yeah.
So I understand that, but let me look at these numbers. They have gone from 29% in FY'21 to 13 to 33 to 43 now. So obviously, the product mixes don't change quarterly or whatever. I presume they change reasonably over, let's say, a few years. So should we say that these are the kind of margins we can look for over the next year or two?
I think so, yeah. Should
okay.
Based on the product mix holding up, yes.
Okay. And then if you're talking about a 15-20% top line growth, stable margins, isn't your 20% profit growth a little conservative? The mathematics just doesn't stand up.
I'll answer your question. There's always something that you never know will happen, right? So why promise something that the other person asks me, is there going to be another one time? There's always something that will go wrong, right? When something has to go wrong, will go wrong. Say less, then you do more, people are happy with you. Or you say more and you do less, everybody's unhappy with you. So I think that's my way of looking at it. Yeah. Okay. Right.
Thank you.
Right. So you never know. See, I'll tell you something. I mean, honestly, when you ask me for a projection, I make it with my best, our best estimate. But there's always so many moving parts that happen in a business. It's tough to sort of, guide. I think you can only make an estimate based on what you believe will happen. And there are always so many unforeseen things that happen during a year. So it's very, and a business as large as ours, you're always going to have surprises. So that's why you're better to be conservative. Yeah.
Fair enough. Thank you. Thank you very much.
Thank you. The next question is from the line of Deepak Malhotra from CapGrow Capital. Please go ahead.
Hello.
Yeah,
Two questions. Yeah. First question is regarding the other income. I just wanted to understand the breakup of the same. I mean, is it going to be a concurrent feature going forward since we have a bit of cash on the balance sheet, please?
Other income of 42 crores that we had in the last quarter. I think 30 crores is coming from interest from the deposits. So rest of them is, other, road tab benefits and all. I think I don't have literally itemized breakup, but I would say most of it is coming from interest income from the deposits. Yeah. I think if I remember, I'm just saying roughly. You asked me on the spot, so I'm trying to answer, but yeah, I think most of it is coming from the interest, the deposits interest.
Yeah. And before I ask my second question, I obviously want to congratulate, the management team for what you achieved. I think this is quite spectacular indeed. Now, most of my questions have been kind of partially answered, but just to rephrase, you talked of basically reinventing the business, and in terms of the growth strategy going forward, and, when you set up a target of 15% plus both on sales and PAT, there are still no easy sweet spots, when we look at the key Para 4 filings and, how competitive the market is. While you have obviously taken decisions to get into crop science business and you talked of growing the business 3 times going forward. But since you have already cash of close to 2,000 crores and you mentioned about a capex of 350 crores, you also alluded to a possible buyback or an acquisition. While you have also made a small investment in Celogen, the cell and gene therapy solutions. What my question is, how are we really trying to reinvent ourselves and actually achieve this growth? Which key markets are we targeting and what key therapeutic segments you are looking? Since again you alluded that, we are looking at new molecules which will basically address, the new kind of diseases and so on and so forth. So I know it's a little a broad question, but more strategic in nature, Ravi. Thank you.
Nothing is easy, Arya. So, you come back and say that, is it easy to find more Para 4s, especially when you're competing with people who all have cash and who all are very large companies? Yes. It's not an easy business by any sense. But I think, we have proved ourselves consistently over the last decade that we can deliver these complex generics. And we have good execution capabilities. I think there's no doubt in that. And we have a knack for finding these niches. I still believe, answering your call, that there are enough opportunities. You just have to put your heart and strategize smartly. There are enough ideas that you can execute. It's not difficult. I don't think it's difficult, but I think it's a lot of work and you need to have clear line of sight, clear strategy and hire the right resources and to execute this strategy. There are a lot of opportunities. They're harder. Yes, absolutely correct. But there are a lot of opportunities. I gave some color to it a few minutes ago. We said we can look at oligopeptides, we could look at drug deliveries, we could look at niche Para 4s, hard to do oncology products. So there are opportunities. This is just some examples of what you could do. Where do you see this world going? I said, we probably have to do a geographical expansion, as I said. We have to probably do an acquisition. But these are the 3 pillars you have to build the business. And hopefully, I think we'll be able to, achieve we're able to check all the 3 boxes. And if we don't get the 3 boxes right, I don't think we can grow. I think it's very clear. So we have to get all the 3 boxes right. Geographical expansion, niche filings, and an acquisition. I think we probably have to get all 3 of them right. At least 2 out of 3 clearly have to get them right. Otherwise, but that's the challenge of the business, right? That's how it's going to be. So.
Yeah, just to pick up on that, in terms of the way Revlimid has been such a staggering success, over the next 2-3 years, I know it may not be possible to share in terms of the acquisition targets or, what exactly you are, looking at internally. But how close are we, say, in terms of 2 things? In terms of, as you mentioned, about 5 to 6 key Para 4 filings you're looking at and making a success just 2-3 out of them over the next 2-3 years. So how close are we to that, A? And B, in terms of any acquisitions, and how close you think you are in terms of securing any such, deal and fructifying the same, please? Thank you.
I mean, we have consistently delivered these complex filings, right? I mean, every year we come up with something all the time. So, I mean, so as I said a few minutes ago, I mean, if the next 2 years we achieve 3 first to files with limited competition, I think it's a tremendous success, 2 to 3. Even if we deliver like 1 to 1.5 idea a year, I think we've done a great job. I think we're at it. That's all I can tell you. We're at it, and we believe we're able to pull something off. I mean, unless I show you something, I can't come back and say I've done it, right? So all I can say is we have a good feeling and we're able to do it. We have a good track record. I think that's the best way I can answer the question. Yeah. Okay?
Thank you. Yeah. Thank you so much. Yeah.
Next question. This is my last question, yeah?
Okay, sir.
Yeah.
Thank you. The next question is from the line of Amit Agicha from HG Hawa & Company. Please go ahead.
Good morning, sir, and congratulations for the set of numbers. My question was specifically targeted towards the debt, the company which is having 116 CR, I think so I heard, and we can save by repaying this the 19 crore tax interest which we are paying. Is the company looking out for repaying the debt and becoming debt-free?
How much debt you're saying? I'm sorry? Yeah, 116. And out of the 116 crores, honestly, I tell you what the split is. This is as of today, okay? So 40 crores is an EPC credit. So you can only pay it back on that particular day. You can't prepay. So there's so you have to receive a certain receivable which will set it off. 76 crores is foreign bill discounting, which is self-liquidating. So I mean, it's just receivable that you sell and you get paid in 90 days. That you'll get paid, you'll get paid in 60 to 90 days. So you set off the foreign bill discounting against the receivable. I think more or less at a net debt level it's zero. So it's not a large amount. I mean, these are only used for working capital operations. I wouldn't be too concerned.
So the company is almost debt free.
I mean, at a net debt level, we're actually net cash, no? I mean, it's as of, I think I'll state the number literally. So 2004 crores is the cash and listed shares and investments and deposits we have. And 116 crores is the debt we have as of today. Yes, that's correct.
Thank you.
Okay. So that's my last question. Again, thank you so much. Thanks for your questions and your inquiries. And appreciate the time you guys have spent talking to us. Good day. Thank you so much. Thank you all.
Thank you. On behalf of Batlivala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.